Podcast with your hosts, Jason Balin and Ian Horowitz.
Ian, what's up?
What's up, man?
What's up?
I like that whistle in our open. Is that you? Who recorded that?
No, that was not me. That was some theme music. Welcome to this week's Real Estate Reserve podcast. I'm your host, Jason Balin from Hard Money Bankers, and my co-host, Ian Horowitz from Equity Warehouse. Got a fun show here for you that I think is a topic that I know Ian and I talk about kind of all the time, and I think it's hard for a lot of real estate investors, in particular, a lot of business owners and realtors as well, but a lot of real estate investors in particular. This relates to, a lot of us think that success just happens overnight, and we get anxious, and we want, you want to just get to it. You want to flip a house, make some money. You want to own a rental property. You always kind of look back and be like, oh man, if I'd bought this property, a few years ago, how much would it be worth today? Like there's thoughts like that constantly happen. And although success just doesn't happen overnight, and what I mean by overnight is it's just like you're not going to buy a deal today and be a millionaire tomorrow. That's just unrealistic. But it does happen quickly. And if you can rapidly educate yourself and rapidly execute on deals kind of as you're educating yourself on a regular basis, success will happen quicker than you think. Think about this for a minute. Where do you think you'll be in 2 years from now? This isn't necessarily a question to you, Ian. I'm just saying in general, like where will you be in 2 years from now? So fast forward to December 2023, which is 2 years from now. Doesn't that seem like it's so far away? It's only 2 years. It's only 2 years from now, but it seems like it's an eternity. It seems like it's so far away. Now think about where you were 2 years ago. That seems like yesterday. That's just how it happens. Time flies. And when you look backwards, that's when kind of a lot of this stuff with COVID hit, almost 2 years ago. So things happen very, very quickly. You don't think about it in real time, but when you look back, it's like, damn, 2 years ago, I was there and now I'm here, and I didn't do anything spectacular. I just took a lot of baby steps and a lot of block and tackle progress, and light years away from where we all were 2 years ago. Or I hope you as a real estate investor were light years away from where you were 2 years ago. What are your thoughts on that?
Yeah, no, it's crazy to even think, especially for those that know our story or have been following along what's been going on with me and Dan. We recently retired, and just looking at it, starting our investing careers not even 10 years ago, and to be able to retire from our jobs, that was something that was never on our map. And when you're starting and you're looking at it, you're going, oh, well, okay, great. I'm getting $400 or $500 a month of cash flow in one house. That's good enough. And next thing you know, you're buying, $12 million storage facilities. It's crazy to think, and it's in such a short period of time. One thing that resonates with me, I don't know if you remember, Jason, we kind of talked about this, is that you guys started about 5 years before us. So you hit your 10-year mark, obviously 5 years before we did. And when you were hitting it, we were just kind of getting, we were a couple of years in, and you're like, dude, what you've done from 0 to 5, and then what you're going to do from 5 to 10, and then 10 to 20 is going to be exponentially more. And I was like, yeah, whatever. And it's just crazy to think that a vast majority of our growth has been over the past 2 years, and it's been insane.
Yeah,
it's very, very hard to keep your eye on the prize, especially when you're taking baby steps and you're investing in real estate. It sounds sexy, but it's not. It's baby steps.
Yeah, it's baby steps. But I mean, think about it like this. Look at compound interest. Compound interest is the best way to me to describe any growth. Go download on your phone a compound interest calculator, because think about this. Let's say you have $100,000 to invest, and you're like, hey, I want to double my money. I want to double my investment. Well, 100,000 doubling is 200,000, right? It's a lot of money, but it's not life-changing money. Now imagine if you have $1 million and you double that. It's the same process to double $1 million as it is to double $100,000, right? And now you made an extra $1 million on that. And I think about that all the time, and I think about that when we invest and what we do. You go out, you go buy 10 houses, right? You go buy 10 houses, you struggle, you grind, you get your 10 houses one after another. Then you're like, you know what? I'm going to go buy a 10-unit apartment building. All you got to do is buy one more property, and you doubled your production, right? And that's what you kind of did over the last few years, as well of, hey, we bought properties. Now I'm going to go buy one facility. And that one facility alone potentially already trumps all your hard work, 10 years worth of work. But unfortunately, you can't just go out and go buy that super high-end property. I'm not saying you can't, but like most people don't from the get-go.
And, to roll this back kind of to the topic, and I think where all this comes from is we could sit here and talk about growth, and that's really easy, is you got to educate yourself, right? Like everyone's like, hey, man, like you guys are doing really well. Like, how'd you do it? And it's like, well, we went out. We figured out what we wanted to do. We learned about it. Then we went out and executed and tried it and figured out all the bumps and bruises, the real world stuff, not just sitting there studying a book and saying, oh, well, hypothetically, it works like this. We went out and literally got our dicks kicked, right? And then after we got our dicks kicked, then we said, okay, let's go back to the drawing board. What else can we learn? And continue to grow off this foundation that we've built that is very solid, that allows us to grow and go up the ladder. So I think, not to get lost in the site, we can talk about growth and everybody gets all jazzed up. You do need to step back and educate yourself first. And then from your education, you need to go out and execute what you've learned from your education. And then it's just cyclical over and over and over again. You can't just always stay in the education crowd, and you can't always just stay in the execution crowd.
Yeah,
I will vote to say, as you execute, you should be learning. And if you're not learning, you're not executing correctly.
Yeah, and I've kind of got a good way to describe that here in a second. And, listen, we're all going to get, punched in the teeth along our careers, right? And you got punched in your teeth in the first real estate deal you did. I did too, right? And then you start, learning from it, and then you start growing from it, right? And then not to say that, then you kind of expand into some other stuff and you do scale, and then you get punched in the teeth again, right? So there's a lot of times in all of our careers we're going to take one step back to take 2 or 10 or 20 steps forward, right? And you take a step back again, right? So you're moving up, you're taking a step back, right? And then you're going back again, leaps and bounds, up again, and that's just part of it. If anyone has a success story over the last kind of 12 months of where they were 12 months ago compared to where they were today, I'd love to hear it. Feel free to chat it in the comments below. If you want to hop on and tell the world live publicly and share your story, love to have you. We'll send you we can just comment that you want the link and we'll send you the link for that. But yeah, as you're listening and following along, feel free to, chat some success stories that you have and be proud of it, because a lot of people have had, success stories along the way. So a few things related to the concept of education versus execution, or execution versus education, because I think a lot of people don't take it serious enough. And there's two sides to this, right? So you got education, then you got execution. On the education side, obviously you need to learn this business. You can't just dive in without understanding and learning it and reading it and watching videos and going to presentations and buying courses or whatever you have to do, right? Over and over, learning from other people. There's the education side. Then there's the execution side. The execution side is doing it, buying a property, getting your hands dirty, doing whatever it takes, but actually buying the asset, buying a real estate property, a flip, wholesale, whatever, a rental, whatever, doing a loan, whatever the type is. The thing with education and execution is they got to go side by side and almost equal, like a seesaw. Imagine a seesaw. It can't be heavy weighted on either side or the next, or you're going to run into trouble. And what do I mean by that? So let's say you're like, I want to learn everything I can, and I want to educate. Your education's all the way up here, and then your execution is down here. Now that's okay in the short term, but at some point you've learned enough. It's time to get your hands dirty, and you got to go out there and you got to buy a property and you got to execute and you got to do and you got to do and you got to do and you got to do, right? And then you're going to go learn more, and then you're going to do more and learn more and do more, learn more, do more. And you're going to continue to grow bigger and bigger and bigger and bigger. And that's what happened. That's what I've done in the past. That's what Ian's done in the past. There's only so much you need to know or learn about flipping a house, right? We'll go out and flip a bunch of houses. The next step after that is cool. How do I assemble a team? How do I go raise capital? Whatever, like lots of different things to learn on that. So that's one side of things. And, the term of analysis paralysis, you're learning too much, you never do deals. That's, listen, that's not necessarily a disaster for failure. It's just a disaster to never do a deal and never make money. The other side is execution compared to education. So if you're the type of person, it's like, I'm just going to go buy these properties. I'm going to do this. And I see this all the time. And it's actually scary. I see too many people that are fast and loose that buy properties. They figure out ways to put capital together. They've got good personality types, so they're able to get deals going, but they don't know what the hell they're doing. And that's going to catch up very, very, very quickly, right? That's all of a sudden you're going from 0 to 60. You have all these deals, but you don't even know anything about them. And that is, number one, irresponsible. Number two, it's just a disaster waiting to happen. And I'm all about, doing and figuring it out along the way. That's not what this is about. Like, fine, go do that. But a lot of these things really have to be side by side.
Yeah, I think you see it a lot as people start to scale inside the business, right? Like it's all related. People get in, they do their first deal, they think they've seen it all. Let's go out, get a bunch of money. Let's go we flipped one house, 2 houses, 3 houses. Let's go flip 10 houses. And sure, yeah, people say, well, that's how you cut your teeth. We also had a little bit of real estate experience prior to that. We had some construction experience prior to that. And we were able to utilize the knowledge that we already had to grow on that. But guess what? We got our butts whooped. Absolutely got our butts whooped as we started to scale. And then it was like, okay, well, we learned everything. Now let's fix it. And I was just talking on a podcast yesterday. We were going through our founder's story. And I said, look, man, for a while we were just ramping up and we continue to ramp up. Were we managing everything correctly? No. But there's also offense and defense, the same way there's education and execution, right? So we went from executing a lot and going back and educating ourselves and refining our management system. Now we had 2 pieces of the puzzle completely fixed. Now we could go buy a 76-unit apartment building that fell in our laps. We could go buy 44 units in another jurisdiction, right? Like those things all started to come together as we understand what we were good at and learning the business even further than, and look, you're not going to know everything, but you're going to learn every time you do something. And I think that's the point of this. You should be executing and you should be educating. Another funny story I'll talk about is recently with our storage facilities, we were discussing, us actively managing it or doing third-party management. And someone said to me, he said, well, why are you spending so much time learning on the day-to-day operational side of things of management? I said, because I need to educate myself. So in turn, I can go out and hire the correct property manager who can hold that person accountable. So we can hold that person accountable to do what we expect to be done at that site. So that's another interesting fact. And so when people are saying, well, I don't need to learn that because I'm not doing that on a daily. I don't need to learn what goes into putting in an HVAC system because somebody else is going to do it for me. The flip side to that is if you don't know what's supposed to be in the HVAC system, number one, you're not going to get the proper service or the equipment that you want. And number two, you could potentially be getting ripped off, for what you're paying for that exact service. So you should try to understand as much as your business as you can, while simultaneously executing what you're good at and having people execute what you can't physically execute.
Very, very good point. And it's safe to say that like myself and my partner, Chris, inside our business, and then you and your partner, Dan, inside your business, for the most part, know every aspects of the business, not only because it was a necessity, but like I want to. I can't train an employee to do stuff inside of our business if I can't do it myself. It's not like, oh, here you go. I mean, real estate investment companies of most of our sizes doesn't support a full-on CEO or a CFO or something like I'm talking like.
Nor do we want it.
Do
you want
stuff.
that, right?
No,
yeah, exactly.
No, we don't. But so I know some people call themselves that, but if you're going to call themselves that, and you have the audacity to put that on your business card, you better act like one, right? Like that's like you better act to that capacity. But like I've done QuickBooks. I know QuickBooks inside and out. Do I want to do QuickBooks every day? No. Have I done QuickBooks in 10 years? No. But do I know how to do it? And when there's an issue, potentially answer it? Sure. Everything related to that, our loan servicing software, all of our marketing tools that we use, all sides of the business, origination, underwriting, doing stuff, doing property inspections, bookkeeping, everything. Like, we had to do that, right? You know, if you look at an organizational chart in general, picture an organizational chart with, like, you know, you have a partner or CEO, and then under them you potentially have, like, you know, bookkeepers and this and this and this. Well, guess what? That was the first thing we did inside our business, was we created an organizational chart and we split up tasks. I did half of them and Chris did half of them. And those were our jobs. And actually, on day one, we actually split those tasks individually, because I remember both of us were investor relations, both of us were originators, both of us were a lot of things, until we divvied them up. And then we hired around that. And this, you know, topic isn't necessarily about hiring or organizational charts. The point is, you know, education, execution, get your block and tackle stuff done regularly.
But if you didn't educate yourself on what bullet points needed to be done when you hired that person, you couldn't hold them accountable to do those things. And I think one point that you bring up, and I'll bring up the same exact point, is the day I learned how to account, I guess you would call it, understanding accounting, forget taxes, understanding accounting first, was learning how to operate our QuickBooks. And I was like, oh, shit, like, this is what we're really making or not making. We were executing, but we weren't educating ourselves in a financial sense.
Yeah.
Then number two, a lot of people don't understand their taxes, right? And all that comes, I'm not saying you need to learn it on day one, but that is a real line item expense you might have. And you should spend some time learning the ins, the outs, the savings, though, whatever else it may be, protect yourself.
I mean, listen, everyone wants to do the sexy stuff first, which I get it. But, and I'm not saying go start learning taxes or even bookkeeping right now. If you've never done a deal before, go out and be a marketer and go talk to everybody. That's like step one. And guess what? Raising capital is not step one. Finding a good opportunity is step one. Yep. Money will come. And, you know, Ian's a believer of that. He just saw that firsthand on some very large syndicates that he put together, that he was able to put all the capital together. And like,
that also goes back to
finding a good deal.
Well, first off, a good deal, number one. Number two, a lot of years of execution, educating, doing the right thing over and over and over and over again. And when you're getting your dick kicked, getting up and doing it again, again, and again, and again. You know, a lot of people think this stuff happens overnight. Boom, it's off you go. No, you have to bust your butt and stay at it, you know. And I that's one of our strong traits, is that we have the willpower to get up and do it over and over and over again. And if you love what you do, it shouldn't even feel like a job. You just do it.
No, it's
not. Yeah, because like people are like, how do you deal with taxes? Like, I don't know. It's because it's just got to get done. Dan doesn't want to do it. It lands in my lap, so I knock it out. I also don't want to put it in
and don't get me wrong. Like, you don't have to be a CPA or a bookkeeper or an accountant or anything. The point is understanding it on a high level. You don't necessarily have to do the keystrokes of a lot of things. You know, like, we have a full-time controller and accountant and bookkeeper, right? We have 2 full-time people for that position, you know, for that stuff. But I understand the strategies of it. And I mean, I kind of know the keystrokes as well, but the keystrokes aren't the important part. That person you're hiring can do this keystrokes. You need to figure out how to financially model or how to set some of these up. And you might not know up front, and that's okay. That's part of the education phase. But like, step one is like going out and finding opportunities. That's the most important thing. There's no need to know how to do bookkeeping if you don't know how to find deals. So we're not stating that it's got to happen day one, but it's part of the education. And for anyone who's been in real estate long enough, this is typically how the transition works. And it's interesting, but Ian could probably attest to this as well. You go out and you learn everything about real estate, everything related to, you know, finding deals and, you know, finding, you know, gurus or whoever, finding money, doing construction, managing deals, right? Like, that's step one. You learn everything about that, and you go out and you start doing some deals. And then the next step is like, cool, what interests me? What do I learn about more? And it's typically something marketing related to try to find more and more deals and more and more deals and more and more deals. And then something related to like, cool, well, now I've got some more capital in place. How do I raise more capital? How do I put a better system in place to track my capital and to work with capital investors? And then you move on to like more business building books or education stuff related to how to build a team, how to manage your team, hiring, firing, bookkeeping, accounting, right? And then you just transition to higher level stuff. And that's depending on where you are in your business. That's how the transition is. I mean, it was interesting. Like 10 years after we were in business, Chris and I were so focused on the business side of things more than the real estate side of it. And that's like all we were focused on was like the real estate transactions, the same darn transaction. I've done 3,000 of these, right? Let's start working on better business practices, team culture, everything. And I mean, I know you're going through that exact same thing or have gone through a lot of those things as well. Like, how to buy a piece of real estate.
Yeah, no, that's a true story, and we're literally working on some marketing stuff now, but out of all of this, I think maybe what I should do is maybe set up something and do a bunch of case studies and just put that information out there, because I think it'd be beneficial to everybody is like, hey man, here's case studies of exactly what we did, and maybe I'll spend some time on that and put that together because I think it'd be helpful. We're here to help everybody else. We get on here, literally me and Jason were talking about this morning, and Jason goes, we haven't done a show in a while. I was like, good, save the conversation. Let's jump on here and talk about it. Because this is literally what we talk about every day. I see Ethan's got a comment. Let's see. Ethan. Jason gave me control. So I'm like a totally different guy now. Pending my fourth door, if it closes, it happens to be 4 doors in 4 years. And that's a great business plan too. One of the first guys that I ever heard about investing in real estate was through my in-laws. They sell and service outdoor power equipment. Every year the guy would come in, buy new lawnmowers for his landscaping business. One year he didn't come in. They said, well, what happened? Did you go out of business? Like, that's really odd because you were really successful. He said, no, I've been buying a rental house for a year for the past 30 years. I now have 30 rental houses. I sold all my landscaping stuff and I'm done and I'm out of the business. I'm going to live off the dividends. Great idea. The guy learned something. He still did what he did really well, earned great income through his landscaping business. He took that active income, reinvested it into passive assets, ultimately making more money than he was at his landscaping company, and then was able to retire when he wanted to retire. I thought that was an amazing story. So, and that's kind of what sparked my interest of getting educated in real estate. So, just so everyone knows, my original goal was I had to work 25 years. Well, if I could just buy one house a year for 25 years, I'd be set when it was time to retire. And I think we did that in year one. So
kind of blew that out of the water. I mean, that's like our same story that our 10-year goal that we had with our coach for our lending company, we beat in 3 years. Like, and that's just what it was. And then we're 3 years later, it's like, now what? Sometimes you set these goals, that you think are just ridiculous, right? Like to you, it was like, man, if I had 25 houses, right? Like how ridiculous does that sound when you don't have any? Like it sounds awful. Like it sounds like, what are you talking about? That's never going to happen. But then you start working on it. And that's what this whole conversation started with when we started this show related to like 2 years from now, in December 2023, like, where do you think you're going to be? And, it feels like it's so far away. I didn't even do 5-year or 10-year goals because those are like unrealistic, right? That's different decade. So, that's a different decade from now.
Yeah, it's hard to comprehend. But I think you said, what'd you say this morning to me? It's hard to look forward, but it's easy to look backwards, right? And I've been thinking about that for the better part of the day. It's very easy to look backwards and say, yeah, that was easy. Like I can't believe I did all that. But to say at the start of that, to say in 9 years or whatever, however long it's been, in 8 or 9 years that I'd be where we are today, there's no way in heck I could have ever predicted that anywhere, even remotely in the past 2 years on this same exact trajectory. It's what I wanted. It's what we strived for. However, there's no, seeing that accomplishment is something totally different. So always remember that when you're looking backwards.
Yeah, and we've done some shows related to goal setting in the past, because that's another favorite topic that I have, is related to setting goals, and like they're realistic. You set a goal for something that could be in a year from now, 2 years from now, 5 years from now, 10 years from now, and you work backwards to figure out what you need to do today to hit that goal, and it's like the easiest thing ever. It's like, oh, all I got to do is make one phone call in the whole day, and in 10 years from now, I could have all these properties or whatever the case is, right? Like it's the easiest thing. It's the easiest thing ever. So, all right. Well, I mean, I hope everybody got some good value from this. This is fun for Ian and I to talk about and share kind of experiences. And, again, we started this podcast. You didn't have any of those storage facilities. Did you own one storage facility when we started this podcast?
Nope. We literally started this. Think about this. We started this podcast at the start of COVID, so March of 2020, right? Yeah, March of 2020. We had all of our single-family houses. We had just bought in Ranson, a 34-unit apartment building. We were in contract to buy the 76-unit apartment building, didn't own any storage facilities, and didn't own Gaslight Square. So think about what we just did in an 18-month period, which is insane. So
keep going on that. I was looking at all these podcasts that we did.
Yeah. No, I'm pretty sure that's when we started. We did the very first podcast we did was the big 3-hour one we did when we brought people in with coronavirus, with the start of the coronavirus.
Yeah, exactly. So, I mean, we've done about 100 podcasts. Like, let me tell you, let's phrase this different ways. Instead of buying 100 houses, let's say you do 100 podcasts. Like, if I was like, hey, we got to go do 100 podcasts, I'd be like, screw you. That's a pain in the ass. I'm not doing 100 podcasts. Yeah. You know how much darn work that is? But it feels like we just started this, recently, because we did. 2 years ago was a short period of time, but 2 years from now is so far away. So just imagine how much stuff you can get done.
Remember like earlier this year, we were like, all right, the goal for this podcast is to do 52 shows this year. And it's a hard goal it's easy goal when you're like, oh, well, it's just one a week, and then life gets in the way. And it's like, okay, well, we try, and but the goal is on there, and you're working towards something, and we have accountability with this audience, So Foster's got a quick question before we go. What's he got down there? Foster, how do you scale though? What was the pivot? The Ranson multi-gas lamp? A lot of people. So was it Ranson's multifamily, or was it Gaslight? No, it was
gas lamp.
Everyone calls it gas lamp, but it's Gaslight Square in Baltimore. But there wasn't like this magic light switch. Like one day it was like, oh, turn and pivot, and maybe it'll be more clear cut to us the further down the road we get. But I think it was just massive execution on the single family portfolio. And then just kind of toying around and figuring it out and saying, okay, well, we could raise a few $100,000 for Ranson, right? And then we're like, okay, well, if we can raise a few $100,000, can we raise $1 million for White House? Okay, we did that. Can we raise $1.5 million for Gaslight? Okay, we did that. And it's just been kind of like a slow trajectory. I don't want to say we met our match at the storage deal, but that was our largest capital raise to date, $4.5 million. It was a lot of you got no hair left.
And then 1.6 a few days later.
Yeah, and 1.6 right behind that. And not to mention that small deal that we just did that me and you put some money in, right? Like, so there's been a lot of things that are going on, but it's like once you figure out what the magic sauce is, it just kind of all culminates together. And I don't want to say it's like, oh, well, we stopped doing single family houses. Then all of a sudden there was all this opportunity in the multifamily world. No, it was like, we're over here in the single family world. That's what we know how to do. Can we even make this bridge to multifamily? And everyone's like, oh, it's so easy for it. No, dude, it wasn't easy, but we figured it out.
And when you look back, you might say it was easy. In real time, it's not. I mean, not that it was easy, but like you forget kind of how hard some of these things are, and it's a lot of work going up. I mean, I think there's two things the way I look at this. Number one is, as you're growing inside your business, you're creating a cash flow machine, right? So you have a cash flow machine, and you can create and new opportunities and absorb new risks on this. So it's like, well, we already have good cash flow coming in here. I don't necessarily want to buy another single family. Let's go look for bigger stuff. We already have cash flow. We already have, we already have a base that's coming in no matter what already. And you don't have that up front. Like, you can't take risks and start working on other stuff, bigger stuff, at least in, the way I look at it, at least. I'm pretty conservative. Like, it's hard to do those risks until you have everything. It doesn't have to be a full well-oiled machine, but you have something come in, right? You have properties, you have income that's coming in on a regular basis. You've stockpiled reserves and cash. You have an investor base, right? You have resources. So it's like, you know what? I can start getting into bigger and better things now because I already have, a good thing going. And you know what? If you, in the back of my mind, if it flops, then it flops. But like, I'm going to go out, but I'm going to go try.
Nobody knows if the corn's going to come out of the ground when they plant the seed, but they cultivate it all year to see what happens. And then we have nice corn at the end of the year, right? Like, it's the same thing. And talk about educating and executing. Here we are executing on a $12 million self-storage facility in Baton Rouge, Louisiana. We're raising $4.5 million, getting $8 million of debt. And I'm writing notes down, disregard my signature. I'm a note on scrap paper type guy, and I leave them all over the place. But here's my notes that I'm taking in real time as I'm doing this deal, looking back on it and saying, oh crap, I should have done this quicker. I should have raised capital quicker. I should have got my debt out quicker, or my deck out quicker. I should have looked at the title provisions at an earlier date and add that to my to my purchase contract. Like, all these little line items that I don't want to screw up going forward again, because I know what pressure it put on me, because I now have a lot of gray in my beard and I have no hair. So I want to try to get all that back. But no, seriously, and Aaron, you're in the fire service. What do you do at the end of every incident? You have an analysis. Well, what some people do, you have an analysis at the end of the incident, right? And you go through what worked and what didn't work. What could you do better next time? How could we mitigate the risk better? It's the same exact thing every time you execute on a deal. And dude, you've been doing some big deals, knowing what that next execution is. And the two deals that you talked to me about, I think you could massively execute on.
Yeah. And I mean, I'm not stating, and I know people go from 0 to 60 quickly and they jump into big assets overnight. That's not me. I'm a little bit more conservative. We've always started small on stuff, but over the years, you grow, you get more confidence, you play in that space. I mean, Ian's big in the storage space, not even the assets he owns, just people know who he is. And, as we've grown, we wanted to start lending on larger commercial projects, and expand our areas a little bit to try to get those types of deals, because just like anything else, instead of doing a one-off $100,000 flip or loan, does it make more sense to do a larger project and make potentially more money doing that? And you play in that space, right? It doesn't necessarily happen overnight, but Ian's inside a lot of those forums.
Well, it's not even that I necessarily knew what storage was all about, but I brought my skill set of understanding how to underwrite deals, understanding how to find debt, understanding how to raise capital, understanding how to execute on construction projects. And when you're looking at the storage industry and you're hearing people talk, you're like, well, did you ever think about this? I know I'm not in storage, but what about X, Y, and Z? Next thing you know, you open up a conversation, you're learning about storage, they're learning about your business, and then boom, here's opportunity to try to figure out how to work together. And again, as much as you're learning, if you can help educate someone else, there's a mutual exchange of information, and it goes a long way. So, but yeah, man, no, that was a good topic. I know we talked about it earlier today, and I'm glad we did it here on the show. So, it's good, especially since we're coming up on the end of the year, going into the new year. This relates to goal setting in general. So
yeah, no, come up with a new game plan. Maybe just thought of this. Maybe what we should do is a show like we did with people's morning habits. When we brought like tons of people on in a short period of time, maybe we'll do one goal that they have for 2022. They can throw themselves out there, and make it official, right? To the whole group. And we do something like that maybe in the next week or two. We'll try to get 30 people to spend 30 seconds and just throw out what one goal they have for the next 12 months.
I'm just glad you're back in your office.
What's the difference?
I don't know, man. I see the putting green in the background. You're back in the wheelhouse.
Dude, I took the entire putting green that we had in our main area. If you've ever been to my office, I'm going to show you this putting green here in a second. We had the putting green it's a big office it's 3,300 square feet, and I'm the only one in there currently at the moment. Like we have lots of offices, and people come and go as they please, but we're getting a big, I think it's 20 by 14 feet. So like one whole room is going to be a putting green. And we were like, well, what are we going to do with this? And I was like, I don't need anything else in my office. Let's just put the putting green in there. So like I've got that whole putting green.
Yeah.
To myself.
There you go.
And it's big. It's 10 feet by 4 feet or something. So it like I can't even put it in straight. I got to turn it in diagonal, and my chair doesn't even come all the way back out because of it. But I don't need anything else. I got my 2 computer screens and it's fine.
Well, hopefully you don't have a water feature coming from your ceiling again anymore.
No. Yeah, we had the unit above us had fire damage, for those who don't know, which is one of the reasons we were out of the office for a while. And they flooded, their sprinklers flooded and literally just drenched everything. But
nice.
We're back to normal and we're good to go.
All right. Well, I appreciate your time, man. It was a good conversation.
Yeah. All right.
I hope you don't expect me to close the show out, because I don't know how to use any of this cool stuff. I'm just sitting here smiling.
That's all you got to do. That's your role. That's your
role. Said I'm the face of the company. Look at me. This is
I was looking at some of these past shows that we did, and you had no beard, and you look pretty damn young without.
Just screen share that. Screen share it real quick.
I don't know how to screen share it.
You can't screen share.
Hold on. Yes, this is a great one. All right, hold on one sec. Let me see how to share this. Hang on one sec. Share screen.
Do a side by side with me.
All right, hold on one sec.
I'm gonna document this one.
I just gotta make sure I got nothing else on my screen that sensitive material. Hang on. Share screen.
Oh my God. That's shoo! Man.
There we go.
My God.
There we go. And you weren't even fully shaven.
No, that was probably like right after work one day. So Jesus.
I'm trying to think if there's any other ones going through this YouTube channel. Well, whatever. Dude, that's funny. All right. Well, hey, like we promised, though, we're gonna do a show and try to get a bunch of people on here with one goal that they have. If you're interested in sharing your one goal, email me at jason@hardmoneybankers.com, or just email Ian at ian@equitywarehouse.com, and we'll get this thing going in the next 2 weeks. I think there'll be a lot of value for everybody. Until next time, make sure you check out our podcast too on iTunes. And if you heard what you liked, feel free to give us a 5-star review, share it with your friends or any other real estate investing or real estate colleague that would benefit for the show. And until next time, take care.
Thanks for tuning in to the Real Estate Reserve podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time.